Mr. Mark Selby, how are we, sir?
Very, very good.
Glad to hear it. Now, we're going to rush through this one today. You are bouncing around doing lots of important phone calls, and you're going to tell us all about it the next few weeks.
Yes, very much so.
Good, glad to hear it. So we're going to rush through this. We're going to do a little bit of market stuff, but then we've got some company news. So we're going to get into a little bit of that and also some we have spoken about a few times, and some we haven't. So I'm excited. So what's happening in the market?
Yeah. So again. We are settled in quite nicely between $23,000 and $24,000 a pound. We popped up above the $24,000 mark, $11 a pound for the non-metric people. It's hanging in pretty nicely. Now we'll see what happens. Now the LME withdrawals that have been pretty steady at 7,000 tons a week have slowed to about 1,000 tons. And again, from my forecast earlier in the year, I do think we'll see a $9 a pound and a breakdown below $20,000 a ton at some point. We do have a pile of nickel pig iron to suck up, but things have come out Chinese New Year pretty tight. Ore inventories were unchanged. Again, normally those would have built up over that time frame. Stainless inventories are just chunk. You're seeing stainless prices, sulfate prices, NPI prices are still at a big discount. And I can expect those to be at a big discount in China all year long, because that's what's going to take the hit from all this nickel pig iron. Sulfate prices hit a new all-time high. And again, if you go back to when we first started talking, generally, if you've got stainless and end-use prices going up, it's generally a good sign in terms of where nickel demand's going.
Okay, and Fastmarkets report came out this week. What does that tell us?
Oh yeah, for sure. And it also explained, we got a little insight as well this week from Bloomberg in terms of why things might have popped in some of the big squeezes that we've seen in the marketplace. So again, coming out of end of the year in January, nickel prices just went up 10 to 15% in 2 weeks on seemingly no news. And generally when that happens, in my lifetime, it's one party figuring out that someone's long or short a metal and are really trying to squeeze them out of the market. And, that seems to be the case here. In the case of this, they mentioned the head of Xiang by name, Xiang, again, who's a super smart guy. And I've had the opportunity to meet with a dozen times. Anyways, Xiang's got caught short. There's now a position holder on the LME. Once you have a position above a certain size, they report the number of holders and what the size of the positions are by a bracket. So you now have Xiang on one side short, and then you've got these guys who are squeezing them on the other side. So, they have, given the increase in nickel prices, those short positions have a bunch of pain. And then technically the issue is, as a nickel producer, you shouldn't worry because okay, fine, I just deliver that material into the market and I close my short out and it's fine and I've lost some money. But it's okay. The tricky part is they don't really make any LME deliverable nickel to actually deliver that material against that product. So that plus the fundamentals, the fast markets, like literally the premium in terms of bringing full plate material into Shanghai, which would be the kind of thing that you would need to deliver and is kind of the only material available in the market. Those premiums have gone up to $400 a ton, which is an all-time record for them. And then in Europe, briquettes, which are the things you use to the most common feed to make sulfate with or other battery chemicals, have gone up another 20% to $250, $300 a ton. And again, those are historically been the two lowest marginal products. So again, if the lowest marginal products have their premiums moving up, that's generally a good sign that things are pretty tight. So
right, and I want to kind of get on to Wyloo and IGO in a second, but any updates on the stainless steel production of 300 series?
Yeah, so we just got the monthly data out, and what's interesting is with the big increases in nickel prices, you might start to see a shift towards the low nickel, which is 200 series, or the no nickel stainless, which is 400 series. What's interesting is the one stainless steel production has come off in December, January as the country's kind of shut down a little bit for the Olympics to make the air cleaner while the world's watching. 300 series is up year over year by a pretty decent amount. So again, I think just underscoring you've got a lot of trends all hitting the right way in terms of nickel. Now, again, we may be up over $11 a pound, but I still think March, April, Tsingshan will try and talk the market down. You are going to see some pretty substantial increases in NPI production. They're at a pretty high run rate, and we're going to have to absorb those during the first half of the year. But yeah, no, so far in great shape. And again, I'm still very bullish for the second half of the coming year.
Fantastic. So, what I'm not bullish on is the very sad sight of man-made snow in China and difficult viewing figures coming out of the Winter Olympics. But that's another conversation. Right, let's talk a little bit of company news. Wyloo, IGO, Western Areas, nice big story. What can you tell us?
Yeah, so again, Western, sulfide assets have been rapidly snapped up, across the time period here. And again, watching this, there wasn't a very long list to start with. It's got a lot shorter. So, again, keep your eye out. And if you can find something good, buy it, hold it, you'll end up winning. Western Areas has basically been an independent nickel sulfide producer for 20 plus years. As the only real ASX listed company, they were always traded at a massive premium. They lost a little bit of their shine because Nickel Mines, which is basically a public market proxy for Tsingshan's operations in China, have been a growth story in a big way. And so Western Areas relative value came off, and then Independence Group, who have reshaped themselves as a full battery metals producer, again boldly selling off their gold assets and saying, okay, we're all in on and buying lithium and buying nickel. They've stepped up now. Wyloo, who was involved in the Noront takeout bid, they picked up a stake in Western Areas over the last few years. So there was some question as to whether they were going to come in over the top with Independence Group. But they basically signed a peace treaty. So Wyloo is going to tender their shares into Independence Group for Western Areas, and they've signed a cooperation agreement in terms of looking at building some nickel processing capacity within Australia. Right now, all of the mines in Australia are a little bit captive to BHP, who've got the mill and the smelter in Western Australia. And so, I think they're looking for an alternate path to market because Wyloo has other nickel assets at Poseidon in the country. That would make a lot of sense to kind of bring those together and look to try and build some critical mass around nickel processing. So, because that's the key thing is all of this EV demand that's coming from the US and Europe, they don't want it to go to Asia in the middle and then make its way back out. They want a straight path from the mine to their car plant, with as little travel as possible. So you'll see that in North America, and you're going to see that in Australia.
Okay, and we'll get on to another big company first before we kind of deal with some of the juniors here. Was obviously Sumitomo Metal Mining. A little bit of news from them, the Japanese miner and smelter.
So they're again don't get necessarily a lot of coverage because that's not. They will never be the hot junior mining stock that you're going to get a 10 bagger on, but they've been one of the industry stalwarts for a long time. Again, in this show, you've heard me banging on about the class 1, class 2 didn't mean anything. So Sumitomo Metal Mining, for much of its life, took matte that was made from the same rock as nickel pig iron into the refinery in China. They make among the world's best nickel and cobalt products, which again blows up the whole argument that you can't make a great product from laterite ore. And they've basically rolled out a $4 billion expansion plan over the next 3 years. So they're tripling production they actually make the next step beyond the nickel sulfate in terms of actual cathode materials and supply that into Panasonic for Panasonic to make the batteries for Tesla. And they're doing an HPAL project in Indonesia. So they've been working with Vale on a project. Vale's had this project on the books since the 1990s. It's finally looks like it's going to be going ahead, and it'll add another 40,000 tons of HPAL production. The good thing is Sumitomo Metal Mining, they are the one company that's actually made this work. They've got 2 plants in the Philippines. The key read through here Sumitomo Metal Mining has been hugely successful in the Philippines. They've built 2 plants, and the fact that they're not building a 3rd plant in the Philippines should give you a sense of, okay, there isn't another good laterite project to build an HPAL plant in the Philippines. So, and that is a higher risk area as well, but it's one of the other big resource bases of nickel. And so if there's not enough there to produce an HPAL plant there, it's really, really down to Indonesia at this point in terms of supply. So again, just really, that's the real read through in terms of what this announcement is meaningful for the market on a broader sense.
Okay, right. So those 2 big groups, they know what they're doing. They've got access to capital. They've got nice balance sheets. But I want to talk to you about a conversation I had with the CEO of, I think it was Integra Resources, just put out a PFS, significantly added to the numbers from the PA through to PFS because of inflation, supply chain issues, rising costs across the board, recruiting issues, etc. Added a significant number to the PFS for all of that, the CapEx and the OpEx. Market didn't like it. He got knocked. We said, look, I'm just being honest here. The reality of getting something into production, the dynamics have changed, the numbers have changed, and we as an industry need to recognize that, and more importantly, investors need to understand that too. And obviously the knock-on effect should be that one would expect the price of said commodity to rise, so take that into account. Do you think guys like Wyloo obviously accept that and know that, Sumitomo know that and accept that? Does that change their investment decision making in terms of the time frame? Will they need to wait for the markets to correct, or is it because of the long cycles here that they're just going to crack on and expect the market catches up? I mean, how do you factor that into your thinking?
Yeah, no, I think they're going to crack on. They're kind of sort of slow moving things with a lot of momentum behind them. So it takes a while to get the ball rolling, but once the ball starts rolling, it's also equally hard for it to get to stop. So, I think structurally they know that the market's short of battery materials. They want to continue to grow and be a meaningful player in the space. And so to do that, they need more feed from an HPAL plant in Indonesia, and they're going to build their downstream processing capacity so they can supply their Japanese partners with more material going forward. So that's not going to slow them down at all. And again, they've been pretty good with their capital estimates. Their project in the Philippines and Mindanao was actually bombed by Muslim extremists. And they still, I think, after having part of it blown up, we're still only 10% over budget and about 3 or 4 months late. So the Japanese are generally, can be pretty good engineers. Not always, because Madagascar turned out to be a bit of a disaster.
And some other company news, we've got Mincor as well.
Yeah, so Mincor's, they have a whole collection of mines in and around past producing mines around the Cambolda area, which is where the BHP mill is, and those were owned by a predecessor company called Western Mining at one point in time. So they've made their first shipment of ore in 6 years to that mill, and that mill will get restarted in the June quarter this year. Again, you've heard me talk about some of the high grade discoveries, and getting high grade intervals is great. It's even more challenging to get multiple high-grade intervals. It's even more challenging to put a resource around it that is of any scale. And so, again, I know people love sexy grades, but this isn't an area. If you go to the Mincor resource statement, you will see lots of 3% nickel and 4% nickel and 5% nickel, and it's sitting a lot of it's maybe a couple hundred meters away from existing development. And they can't make the math work, at the scale that they need to mine it. So, and they've been shut down for 6 years. So, and they're only starting now with nickel prices back over, $10 a pound. So again, just tread carefully that, when people find some high grade, that needs to be part of something chunky. Otherwise, it's going to be, tough to make the math work.
Okay. Well, that's like I say, there's some pretty good color there on the fact that high grade headline numbers, which I talk about a lot, don't always convert into economics or the ability to actually become a mine. And Yeah. So point well made, Mark.
Yeah. And to be honest, we're starting to see a lot more exploration activity. Again, I've seen some pretty stinky recycled stuff that's coming up. I found a rock with some nickel in it 25 years ago, and now I'm going to try and raise some money to drill around underneath it. But hopefully, there's a lot more talk about geophysical anomalies and targets and so forth. So hopefully, over the next 6 months to a year, we start to see some good new intersections on new targets. But still, sort of this far into the nickel story, not a lot of big new or interesting new real discoveries at this point. So again, fingers crossed, as I said, all along, we need it all. We've seen the physical tightness in the market already, and we're just getting started on the EV story. So I think it's going to be a very interesting 12 months.